Okay. Good morning, everybody. Welcome to today's game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com and InTheMoneyStocks.com. So listen, the weekend is over. It's time for us to put down the football for now anyways and take a look at what the charts are doing. Now, we saw last week continued rally. Now, follow me over to the board. Now remember, last week was an intriguing week on a chart basis. And by the way, we're going to get into crypto. Crypto had a pretty nasty dump last night after being strong all weekend long. We'll cover that. Natural gas getting pummeled again. Holy cow. But before we get into that, let's just take a look at what the S&P is showing us, because this week is an important week. Number one, tomorrow, 8:30 in the morning, the CPI data is reported. So CPI, obviously an inflation gauge, it will move the markets one way or the other. On Wednesday, we have the Federal Reserve announcement, the FOMC policy decision. There's not going to be a change in interest rates. We know that. But it's what kind of language do they use? And then Jerome Powell will have the press conference at 2:30 p.m. Eastern time, where really that's where I found the markets move the most on, when he talks about things in there and answers questions. So what is the Fed thinking? Is the Fed okay that the stock market continues to rally up? Risk assets continue to go higher? Are they okay with that? Or does he try to talk the markets down just a bit? Okay, looking at the SPY, the S&P 500, this is the 10-minute chart. So each of these little tiny bars is 10 minutes. Again, we talked about last week staying within this channel. We got one day where it got below the trend, right? Below that channel line. Now, again, if you're a technician like me, a close below is good, but I've seen it fake people out too many times. I look for confirmation, or essentially follow through to the downside on the next day. So the next day, what I would have wanted to see is continuation to the downside. Didn't have to be a huge day, but you wanted to see some sort of follow through based on the breakdown there. Instead, the amazing thing about this market was that we opened back right inside of that channel. It's not even like we opened here and had to get through to get into that channel. We just literally opened in that channel and stayed there both on Thursday and on Friday. Now, the jobs report on Friday was pretty strong. Overall, people thought that the markets would dump a little bit on that because it was stronger data. But again, what I heard was everyone making excuses about why it was strong and ultimately why it wasn't as strong as the numbers kind of allowed us to think. And that, again, helped the markets trend gently higher into Friday's close. So that brings us into this week. This week, this channel remains important. The low end of this is right around 457.50. So again, I want to see, do we see a sell-off below 457.70 on the SPY, 50 I should say. If we do get below there, then game on again for watching to see if confirmation occurs. All right, now if we flip over to the daily chart on this, and we look at where the markets sit, and this is that same channel here. Let me bring it up. So that's that same channel we were just watching. What we can see is we have, based on this, closed above this pivot high right here. This is the first daily close above the highest point going back to the July high. So again, the question I have, just like when we closed, and this is where you're as a technician, you have to keep the rules the same. So just like when we had this channel and we closed below, you want to see follow through. The question I have is, okay, we closed above this high here. Do we get follow through today? If we get follow through today, it may set up continuation moves up into the year end. and we could see us retest those all-time high levels. By the way, the markets are not far away from the all-time highs. You guys know the rant that I went on last week in the game plan talking about how ridiculous it is and how debt-fueled this market is, but the debt is actually increasing. All that money in the system, even as the Fed tightens interest rates, all people are doing is charging on credit cards. The government's running up their bill. We're now basically at $34 trillion in debt. All of these things are adding fuel because, again, the more money the debt of the U.S. goes, remember, that's money that ultimately finds its way into the system and is spent stimulating the economy, creating more jobs, creating all these things, and thus the jobs numbers have remained strong for now. All right, the question that I have, obviously, is does inflation start to peak up a little bit? That's actually what I think is going to happen. Maybe not tomorrow on the CPI data, but I think in January, February, March, we'll see the CPI numbers stabilize and actually start to uptick just a little bit. And I think that's where the market starts to freak out. Okay, so we basically have this chart pattern here. If we were to sell off on the SPY, your general first target is going to be right there. If we continue to confirm above this previous high, you have to start looking at all-time highs on the overall S&P 500. Now, quickly just going to the US dollar, well, let's go with rates first. Let's take a look at the 10-year. We knew we had isolated this level out prior as major pivot support. We basically came down, we kissed it beautifully right here, right? So again, we kissed it right in here, and then we've gotten that bounce to the upside. I've given you an upside target of where I think rates could go. You basically look at this area right in here, which then cuts right through this area, and we're looking approximately around 4.45 to 4.5%. All right, now again, I want to just point this out. One of the things that I think is a little insane and why the markets are reacting emotionally on this hopium is that next year, the FOMC, the Fed Funds Futures is pricing in, or investors are pricing in, a 130 basis point cut in interest rates. And my point is this, is that right now the markets are saying, oh, yay, rate cuts, and we're going to have this perfect soft landing in the economy where we're just going to continue to go just slightly growing and everything's going to be great. We sing Kumbaya, right? The answer is this. If the Fed is forced to cut 130 basis points in 2024, I guarantee you we're not singing Kumbaya about the economy. It's going to be a much, much different scenario, a poor economy at that point, probably a pretty bad recession. All right, so a couple other charts here to go over before we get into things here as we go through. So I just want to show you the US dollar again. The US dollar, if we just flip over to this chart, we are back into resistance on the US dollar. Now, the reason why this is important here, folks, is that if we look at this pivot to this pivot, goes right to here. Now, again, notice how we hit this, and you can see there's a red candle here and then a green back up. The more we hammer on this to the upside, the more the chance is we could actually break through and go to the next level right here around 105 on the US dollar. And again, the dollar's actually gained some decent strength. After putting in this low near 102, the US dollar's back to 104 and change. If it breaks here, that's a pretty impressive retrace. Now, again, do I think the dollar is going to stay strong? No, honestly, I don't. I think eventually the dollar rolls over. But needless to say, the markets prefer a weak dollar right now versus a strong dollar. All right, so a couple other charts here I want to just go over real quick. We do want to take a look real quick at SE. SE is in motion today. This is a kind of a gaming e-commerce play out of Asia. And again, the chart was already beaten down here. But if we look at our real-time data, take a look at this, where this thing is trading pre-market. It's getting hammered down here. So we're trading at around $35.60. Now, if we go to the daily chart and we know it's trading around $35.60, what do we have on the chart? If we zoom out, there's a lot of support. In fact, I have a major gap fill, and this is going to be really hard for you guys to see. All right, in fact, I'm going to get rid of these other trend lines here. So this would be a level where I don't want to say load the boat, because I don't really ever load the boat. It's always, average averaging in, dollar cost averaging, little positions starting with, and so forth. But again, if you go all the way back to 2019 right here, right? So if we go all the way back, and I apologize if it's hard to see, but you guys can go find this on your own charts. There's a gap fill right above, basically right at $30. You know, maybe even 31, 32. I'll have to isolate it down. And so while we're still above that, if we did flush into gap fill, that would be a very interesting opportunity on a buy for the SE chart here. All right, having said that, guys, I do want to show you one other chart, and this is really cool. So I've been doing some research, and again, I want to show you. You guys see all these parallel lines on the chart? So there's a company on TradingView called Lux Algo, and this was all. Lux Algo has this parallel trend line technique, and they actually will draw on your parallels for you. And what I love about it here is that the parallels are actually pretty good, right? To this pivot low right to here, and so on and so forth. And you have like right here, so if we go up here, that's going to be resistance, and so on and so forth. So the point is that, you know, again, Lux Algo came to me and said, hey, we see what you're doing in your charts. We think that this goes hand in hand with what we're developing. I know some of your viewers may have trouble drawing parallels and getting the right parallels in play. So we have this parallel thing for Lux Algo where you can use it on TradingView. So again, I just wanted to say thank you to Lux Algo for sponsoring me. And again, we're going to take a 30-second break, and I just want you guys to check this out. Check out this commercial. Take it away.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
All right, guys. So thank you guys for taking that time. I think, you know, it's one thing. I think, you know, using tools that will help us. And honestly, I'll use this tool myself. It is kind of cool to have the parallels already drawn in there because it actually can find parallels that you may not even see yourself. Even my trained eye may not see. So pretty cool stuff. All right, on to Bitcoin. We got to talk Bitcoin, guys. Bitcoin had this dump last night, tremendous drop. The first thing that I thought about is, wow, Bitcoin's market cap is approaching $1 trillion again. How does the SEC, looking to approve a spot ETF, like it when it drops from 44,000 down to almost 40,000 in a matter of minutes? Because that would be the equivalent of something like Microsoft or, you know, Meta or something like that, you know, basically having a flash crash. And that is dangerous. So again, we did see this big drop. Now again, if you've been following what we've been talking about, we talked about how price can still go up maybe as high as 48 to 50,000, but price is getting overdone. And again, I've continued to say that, hey, I'm inching in shorts here. Even if it goes up to 48, I'm just slowly inching in shorts. And I want to show you this, guys, because this is actually a game changer for me when it comes to the charts. So first off, here's your daily chart of Bitcoin. So Bitcoin, again, it's off of its lows, but look at the move up. Look at the consolidation. So this is the first negative thing I've seen on Bitcoin in a while, frankly. You had bullish consolidation here, okay, and then this. That kills the bullish consolidation. You can't claim this is a bull flag anymore. Once you have that down move, and we covered this in last week's game plans about the angles of flags. You need a 90 to 45 degree angle. Once it gets less than 90 degrees, like, you know, or I should say 45 degrees, once it's 35 or 30 or 20 degrees, it's no longer a high opportunity, high data driven trade. All right, so that's the first thing. The second thing I want to point out is the alts have incredible negative divergences. When I was looking at divergences on the RSI this weekend, I was floored. I literally was floored by the negative divergences, and it made me honestly think, you know, the alts have been running incredibly, but the negative divergences have me saying, holy cow, what the heck is going on? And I want to show you this on a chart like Solana. right? So I know, listen, and I'm probably going to piss off a lot of people out there, but the point is that I'm here to point out reality, and it doesn't mean that this is going to play out. It could totally ignore it, but my point is it's important to know the possibilities, right? Good investors know the possibilities. Then you make your decision, whatever it may be. So what I want to show you here is the divergence that has occurred in the chart of Solana. So when we look at Solana here, we can clearly see that here you had a high and here was a higher high. So that implies that the RSI should have made a high here and it should have made a higher high here. If we look down here and we draw that in, we see a high here on the RSI and a huge negative divergence on the RSI to the downside. See how this line is sloping down while this is sloping up. Now the kicker is this, guys, is that when you see negative divergences, it basically tells you that small money continues to buy, but big money continues to unload. And so that's why I pay attention to the RSI negative divergences, is because it literally gives you a heads up that there's something not quite right. That at some point, and this is the tricky thing with RSI divergences, you don't really have an exact time frame. That's where you have to go to like the intraday charts or the daily charts to find that topping tail or that trend line or whatever it may be. But the RSI divergences tells you something is brewing, something is coming. Okay, so all of a sudden you could see here we have the negative divergence, and then what happened last night? Boom, right to the downside, where this thing literally fell, about $5 to $6, almost 10% on that chart. Now, if we go to some of these other altcoins, they're much the same, right? So if we look at a Cardano, all right, take a look at Cardano here if we go to this, and we can generally see that you're still in that same position where you have a negative or equal divergence. Here in this case, it's about an equal divergence, same height here. Oh no, check that, my apologies. It's actually much, much lower here. Oh, check that, there we go. So here's your flatlining divergence. If we go right here, is equal over here, yet look at how much price has gone up instead. And again, this is more of a flat divergence, but again, it's much more dramatic there. I'd say Solana is the most impressive one of them all. If we look at other ones, let's look at a few others in the altcoin market. If we take a look here, here's a good example again on Rune. Take a look at this. Here you have, again, an example of where are your high pivots, right? So if we look at here, right here was a high, here was a high on the divergence. If you look at this, that's a higher high, but look, all the way down here, you're now lower. So higher and lower. And again, I'm only pointing this out because, again, it's just information, right? My goal here is to show you information and give you probabilities and data and all that stuff, and that's an interesting thing. And you're seeing this more and more in the altcoins. Bitcoin, let me see if it actually shows up on Bitcoin as well here, because that would be fascinating if it did. I'm not sure if it does. Wow, the answer is yes, it does on Bitcoin. Wow. All right, so let me show you guys this. So last one I'll do, and then we're going to move on to gold, natural gas, and oil. But very clearly here, look at this. All right, here's a high on Bitcoin, and look at the RSI. Here's a higher high on Bitcoin, all right? Here's a lower RSI. Here's a way higher high on Bitcoin. I left those lines in there here. In fact, we'll move it around. So look at this trend line down. Look at the trend line to the upside. And again, negative divergences. And again, I guess what this tells me is that whether or not we get to 48,000 to 50,000, I'm not sure. I think that to me is my max upside. But it tells me that there's going to be a more impressive flush. We've already kind of gotten a little bit taste of this, but this is just, if these divergences are true, this is just the beginning of this. And I know it's not going to be popular out there, guys. I'm just giving you information. Do what you will with it. All right, next up, let's quickly touch base on gold. Gold is having a pullback here. Now, the key on gold is actually gold is into a major technical support. If you're someone who wants to swing trade gold, this would be the opportunity to start a position. The reason why I'm saying that is that we've gotten the rejection here, right? But look at the trend line we're right into. All right, in fact, I want to zoom out a little so you guys can see where this trend line comes from. So if we zoom out, all right, all you're going to do here, okay, there we go, is take this pivot high with this pivot high, and look, after the pierce, where are we? We're right back to that line. So again, gold looks like a buy here for a technical bounce for at least a swing trade. The other thing to just point out here, and this is just something I saw this morning when I was doing some research, if we zoom out on the daily chart, right, and we look at, bear with me, maybe I have to go to the weekly chart. Okay, yeah, on the weekly chart. So here's your weekly chart of gold. Couple fascinating things about this. So number one, if we take this former high from 2011, so let's take a line right there, let's punch it in and draw that line across, and we connect it to the high of 2020, where does it go? Literally right up to the high that we hit up here, right? Pivot high, and pivot high. Pretty cool. And again, doesn't mean a whole lot, but to me, it just makes sense that gold stopped on a dime right there on that move. The other thing to kind of take a note of here is that if you look at this chart, right, we had this kind of flat top to it. And again, look at this. Big distance, shorter distance, shortest distance. All right, so let's look at over here. And then it broke out, by the way, right? Big distance, shorter distance, very short distance. So you see this pattern formation, and it's just kind of a little bit of an inkling into my guess is that this is what we're approaching right here on gold for the breakout. Again, big, smaller, smallest, big, smaller, smallest. At some point, we'll break to the upside on gold. All right, just a couple more little things. Silver, guys. Silver is a huge, to me, I love this as a swing trade. I've been accumulating a little SLV myself down at these levels here. Let me flip over to that right now. Look at this dramatic oversold sell-off on silver. It's down today again. It could go as low as this level right here. There's this trend line right here to here to here. But again, you're now approaching a time count, 2, 4, 6 down days in a row. We know, at least from my methodology, the 7 number is the key one, so that would be tomorrow. CPI is reported tomorrow as well, by the way, to maybe coincide. But look at how oversold that is in such a short amount of time. You should get some sort of technical bounce here on the silver chart. All right, lastly, oil, not much to report, honestly. Oil's pretty much just doing its thing here. It's flattish on the day. Natural gas is like the butt kicker, man. I mean, again, I've talked about this last week, folks. You know, they call it the widowmaker for a reason. Again, my positive is that when I started buying this, I started with very little. So even though I was buying kind of up in this range, a little bit here, a little bit here, a little bit here, maybe a little bit today again. But I mean, this is a big sell-off on natural gas. Like, holy cow. You know, to see this kind of drop in a straight line is super unusual. Again, you can make cases that maybe there's some manipulation end of year type stuff going on. But again, at some point, we'll get a bounce out of this. The key is to keep my average as close as I can to this so that when we get that bounce, we get in the money as soon as possible. But again, to be honest, I don't really have much. You know, there are situations as a technician where, you know, there's probably something to find out here. I'm not seeing it right now. I got to do a lot of number crunching, but to figure out where the next support is, or do we rally up and put in a bottoming tail? I don't know. But again, this type of move, we had a support late last week. We hit right here, blew right through it today. They gapped it down last night, kind of a little bit on the shadier side there. It is what it is, right? That's just the nature of investing. Remember, you could be the best investor in the world, even Warren Buffett, right? He still has duds. We all will have duds. There are ones that it's about how you maneuver in them when it happens. All right, back to center screen, guys. So listen, let's just continue to crush it. We just got to continue to look at the charts, let the charts guide us as best we can. Analyze the charts. Let's watch the CPI data tomorrow. Let's see what the Fed says on Wednesday. I want to watch gold. I want to watch silver. I want to watch natural gas. I want to watch that channel on the S&P. Let's keep our eyes open. I will be back tomorrow at 9 a.m. Eastern time to update you with everything. Take care, guys.